Most new traders overcomplicate Forex trading. They think they need 15 indicators, hours of screen time, and some secret sauce to find profitable trades. But what if I told you that simplifying your approach could change everything? Let me show you how to find winning trades without the overwhelm. Now, if you're tired of bouncing between strategies, burning money on courses, or feeling stuck in analysis paralysis, this video is for you. And today I will break down my step-by-step for beginners on finding profitable Forex trade ideas. You'll learn how to simplify your strategy, use basic tools like round numbers and one simple moving average, and focus on what really matters. So let's get started. Let's be real. Most traders spend months, even years, jumping between strategies, losing money, and feeling frustrated. And trust me, I've been there. I thought the more I learned, the more I would earn. Spoiler alert, that is not how it works. The key is simplifying your process. So let's cut through the noise. First, you need to separate analysis from execution. Think of analysis as figuring out what's worth trading, and execution is deciding how to trade it. See, most traders obsess over trading strategies. But here's the truth. A strategy is just a process. If you break it down into components, it's like this: where to enter, where to exit, how much to risk, and where am I going to set my stop loss. So let's dive into the charts. And before we start diving into technical indicators, let's start with something very simple: round numbers, also known as psychological levels. And I'm now going to head over to the chart and show you how this works. So as you can see here, I've got a plain chart, okay? I've got a plain euro-dollar chart, and Smart Charts is my preferred platform. You could do this on any trading platform you prefer to use. Now, I've just got the euro-dollar and I'm on a daily time frame. So what I mean by round numbers, if we look at the current price right now, it says 1.2730. And sometimes, trying to remember these numbers get very, very confusing sometimes, especially if you're new to trading. So the simplest way I've found in getting comfortable with the charts is understanding round numbers, also known as psychological levels that could act as support and resistance. And if you don't know what support and resistance is, don't worry about it. We'll dive into that a little bit more in another video. So I'm now going to head over to a chart that has round numbers on it. So this is what I mean by round numbers, and I'll show you how to manually add them. But if you look on the right, 110, 109, 108, 107, these are a move of every 100 pips, every 100 points, okay? And as you can see right now, we look at the current market on this daily time frame. In the past 2 days, the market went from 103 to 102. Now, what if it could be as simple as, I think euro-dollar is going to go to 103 to 101. That would be a 200-point move. Very simple to roll off the tongue. But now I'm going to dive into that a little bit more. So as we just move out and zoom out a little bit, do you see how the market reacts off these round numbers or psychological levels? I'm just going to keep calling it round numbers. As you can see, look, 112, market went down all the way to 108, 108 to 109, 109 to 107, 107 to 106, 106 to 105, 105 to 106, 106 to 104. It's just price, isn't it? Because the key thing to trading is all about price. So let me just show you how to add this. So if you go to a plain chart, what you need to do is go to your drawing tools. And if we click on the pen here at Smart Charts, we can use a horizontal line. So just double click. Now, wherever you click the line, you can sit there and manually try to drag up and down and be very, very precise on how you put it. Or once you place the line anywhere on the chart, just double click and go to points and just type in 106. And you can keep adding that every 100 points. You can go as high as you want. You can go as low as you want, okay? If you want to sit there all day, be my guest. But only go to the numbers that you need so you're not wasting time. Because the key thing is to understand the direction and which price point are you going to trade from. Are you going to trade from a high to a low point? Or are you going to trade from a low point to a high point? Now, the next part we're going to add is going to be looking at a simple indicator known as the moving average. And I'm sure everyone here knows what's a moving average. A moving average helps us identify trend reversals or ranges in the market. And what I'm going to do here is just put a simple 20 EMA on the daily time frame. And everything based on this chart is based on a daily time frame. So again, any trading platform you choose to use, it will be in the indicator part. In this case, if you're using Smart Charts, just head over to the top right-hand side here and you see a little icon. And you can type EMA I'll put a heart on it. So every time I need it, it will always be the first thing there. I double click. And as you can see now, I've got a 20 moving average on. Now, very simple. How to use this indicator. If the market is above the 20 EMA, we look for buyers. If the market is below the 20 EMA, we look for sellers. Okay, so now we've got round numbers and one simple EMA. Here's the next part that's really, really going to give you that little bit of edge. Instead of stressing over daily trades, analyze for the week ahead. Use the daily chart to get one bar of data per day. This way, you're not chasing trades or falling into the trap of overtrading. Organize your analysis, plot your psychological levels or round levels, observe the moving average, and decide if the market is likely to go higher or lower based on these clues. So let's head over to the chart and let me explain a little bit more. So if I go to my indicators on smart charts, there's a little indicator called period separator. I'm going to make sure it's set to weekly. And what this does, it shows me the market in weekly intervals, even though I'm on the daily time frame. Just going to change the color so it's a bit easier to see. And at the moment, I'm just going to remove these news alerts because they're just crowding the chart for a second. So we're just going to head over here, go to trading. Yeah, just select there and that removed the lines. That's a lot more clearer now. So as you can see, right, this yellow line to that yellow line shows us last week. Okay, shows us last week. So the market went down, right? Some people might call this a lower low. This will be known as a phase one. This could be known as an impulsive move to the downside. This could be known as an extension to the downside. There's many terminologies. Very simple. I'm just going to call it a phase one down because a phase one is always longer than a phase two. This will be known as a phase two, bit of a pullback. So now, one little tip and trick I do is like to analyze for the week ahead. So if I get a vertical line now and I put this here, this is Monday, Tuesday, Wednesday, Thursday, Friday. So let's say this is Friday now. I'm going to get 5 daily bars in 1 week. As you can see here, this bar was Monday, Tuesday, Wednesday, Thursday, Friday. This is bars Monday, this is Tuesday. We still got Wednesday, Thursday, Friday to go. When analyzing this, let's say, for example, I think this is now made a phase one down. I might say market could pull back to 103 and then go back to 101 or towards that direction. So now I've created an analysis that I think that the euro dollar can go from 103 to 102. All right, very simple. Why? We're below the moving averages. The market's made a lower low, a lower high, which the 103 could act as a resistance level. And from there, the market could turn around due to other external factors like the CPI figures coming out this week or any other thing that could affect the currency. We do know Trump is coming into the White House and his tariffs have been slightly changing, which could weaken the dollar. But any more talk on his tariffs could strengthen the dollar. Now, at this point here, you can see now we've created a trade idea that we can decide to be a buyer or we can decide to be a seller. At this point, let's say I'm deciding to be a seller. So if price gets to 103, I can say I'm looking to be a seller from 103 to 101. That's 200 points down. I could simply put my stop loss at 104, which is 100 points up, which makes I can make twice as much than what I'm going to risk. Now, you're probably sitting there saying, oh yeah, but there's more variables to it. This is a beginner's approach for someone to say, okay, the key thing I need to know is direction. Once I've speculated direction, I'm going to decide whether I want to be a buyer or a seller. And in this case, instead of trading the pullback, which you can make money on if you have a pullback or strategy or you trade faster timeframes. But in this case, I'm trying to make a simple approach that where I think euro dollar can continue down from 103 to 101. And in that case, how am I going to enter? That decides on my execution method. So we made an analysis, but now my execution method could be various things. Am I going to enter on the daily time frame? Am I going to drop down to the lower time frame? Do I use price action? Do I just trade off price? And this is something that you start leveling up on and creating a tailored approach on how you execute. Because in my other videos, I've spoken a lot about being clear about you and your life audit. How much time can you commit to the markets? Most of the time, traders are always missing trades because they're very unorganized. So now that we have an analysis, you can now begin to organize yourself to make sure you don't miss that trade and you can develop the execution method you want to use that fits around your life. Okay, so look, let's just finalize that. Once your analysis is done, plan your execution. Are you a trend trader? Are you looking for pullbacks? Or do you prefer breakout trades? Stick to your plan and avoid getting distracted by random tips or news article. Consistency is the key to everything. So there you have it, guys. Make your trading simple with round numbers and one simple indicator, and ask yourself this question: what can happen next week? Should I be a buyer or should I be a seller? Now, you could do this scanning various currencies, or you can do it on just a few so you don't get overwhelmed and distracted. At the end of the day, guys, trading is all about price. You either sell high or buy low. And sometimes just by using round numbers can make it very, very easy for you to get confident with the charts.